We're going to go over briefly the closing process. These are your year-end, the final steps, the final entries to close your books. So why is closing necessary? Well, it all has to do with GAAP rules, revenue recognition, the matching, and periodicity. This will reset all of your temporary account balances to zero going into the next fiscal year. It's important to understand the difference between a temporary account and a permanent account. And a way to remember it is R for revenues, E for expenses, and I for income, REI. In accounting principles, you might have had a D for drawing accounts, but there is no drawing account for a corporation. Withdrawals are in the form of dividends. Earnings are accumulated in retained earnings instead of in a capital account. So for the sole proprietorship or partnership, you follow REID. You should close in this order. For a corporation, it's just REI, again, because there is no drawing account. So let's look at an example. Let's say your year-end balances for these temporary and your one permanent retained earnings account. So we're going to close. It's the last year, or the last day of this year. You have your revenue, expense, gains, and losses, and of course the income summary you're going to use. It's just a tool to close. Plug your beginning balances from this example, and then your one permanent equity account is retained earnings. So now instead of closing to the capital account with a corporation, you close to retained earnings. And the beginning balance is $32,005. So to begin, close revenue and expenses to income summary, debits and credits. Close your gains and losses to income summary. You end up with a net income in this example. Close your net income, $1,250. It's not to a capital account, it's to retained earnings. Credit will increase retained earnings, a debit will decrease it, which is why net income is a credit, a net loss would be a debit, and of course a dividend declaration would be a debit also. So now it's the next year, the first date, let's say January 1 now. All your temporary accounts are closed and you've updated retained earnings. Finally, you have to perform a post-closing trial balance. The purpose is, of course, to make sure debits equal credits, but there's one more purpose of this trial balance. It's just to make sure, double check, all your temporary accounts are closed. These should all be zero. And that is the closing process.